Okay, employee stock purchase scheme. So what is meant by employee stock purchase scheme? Basically, what is meant by employee? What is meant by employee? Employee means under Companies Act 2013, there is a specific definition of employee is given. There is two concepts, one is employer and one is employee. Employer means the person who provides job opportunities, that is employer, and employee means the person who work under the proper guidance of employer, that is employee. Okay, so what is meant by employee under Companies Act 2013? A permanent employee of the company who has been working in India or outside the India for that particular company. The person who is working in the company in India or outside India, that is the employee. The second important point of the definition of employee, that is a director of company, whether whole-time director or not, or an employee or a director as defined in sub clause A or B. Okay, listen carefully. A director of the company, as we discussed in 11th standard, that is whole-time director, that is whole-time director is also treated as an employee of the company, or an employee or a director as defined in subclause A or B. A or B means whether it is a permanent employee working in India or whether it is a permanent employee working outside India, or a whole-time director or director or whole-time director. Both these 2 points, that is A and B, permanent employee working in India or outside India and director or whole-time director in India or outside India of holding company or of holding company of the company. किसी भी कंपनी के अगर होल्डिंग कंपनी है, then what is meant by holding company? All these concepts we studied in second topic of 11th standard. What is meant by holding company, what is meant by subsidiary company. Okay, so employee means permanent employee in the company working in India or outside India, and a director of company, whether a whole-time director or an employee or director defined in subclause A and B above of subsidiary in India or outside India of holding company of that particular company. Okay, if Mr. X private limited company, okay, is the company, and company having two holding company, A company and B company, so the director of A company and director of B company can be also employee of X company. Okay, so it is a example of holding company. So this is the definition of employee. Next, employee stock purchase scheme. So under this scheme, the company offers equity shares. Under this scheme, the company offers equity shares to its employees at a discounted price. Okay, listen carefully. As per this scheme, the company offers equity shares. What is meant by equity shares? Equity shares, that is ordinary shares, or equity shares means those shares who does not have preferential right at the time of payment of dividend and repayment of capital at the time of winding up of the company. All these things we studied already in topic number 2. Okay, to its employees at a discounted price, which they can buy at a future date. Means under this scheme, the employees get shares at a discounted price which they can buy at a future date. Okay, as per this scheme, the company deducts a certain amount from the salary of the employee towards the payment for the shares. Okay, for example, many times if any employee apply for the loan in a bank and bank grants a loan, and from his salary automatically the specific amount of EMI is deducted and deposited in bank as the amount of EMI. So the specific amount from the salary is deducted by company from the salary of the employee and is taken as a amount of shares which company issues under the employee stock option, employee stock purchase scheme. Okay, for the payment of shares. So provisions under employee stock purchase scheme. Okay, different number of shares can be offered to different categories of employees. Different number of shares, there are only two number of shares, that is equity shares and preference shares. Equity shares and preference shares, but under this scheme only equity shares are issued. So equity shares having also two types: equity shares with normal voting rights and equity shares with differential voting rights. So equity share with normal voting rights are issued under this scheme. Okay, generally these type of shares are issued under this scheme. Okay, so different number of shares can be offered to different categories of employees. Then what is meant by different categories of employees? That is permanent employees, whole-time director as an employee, the employee of subsidiary company, the employee of holding company. Next, shares issued through employee stock purchase scheme can be immediately listed. Then what is meant by listing of shares? This concept, particularly this concept, we studied many times from 11th standard also, and from previous topic, that is topic number 2nd, we studied this concept, that is listing of shares. Listing of shares means registration of shares in the registration of shares of the company with the stock exchange, that is with the Bombay Stock Exchange or with the National Stock Exchange. That is listing of shares, registration of shares. Next, employee stock purchase scheme. Shares will have a minimum of 1 year lock-in period from the date of allotment. What is meant by lock-in period? Lock-in period means during this lock-in period of 1 year, employee cannot sell his or her shares to any person. That is a lock-in period from the date of allotment. What is meant by allotment? Allotment of shares means the procedure followed by company as a positive response to the applications received by company for issuing shares and transferring ownership right to the applicant regarding the issue of shares. Okay, next, company has to fulfill the provisions of SEBI, that is shares based employees benefits regulation 2014. आता इथं जे दिलेलं आहे provisions of SEBI, companies has to fulfill the provision of SEBI. What is meant by SEBI? Full form of SEBI, Securities Exchange Board of India. And Securities Exchange Board of India's regulations, shares based employee benefits regulations 2014. Okay, next, company has to get the approval of the shareholder, that is existing shareholder. Company has to get the approval of the existing shareholder. Then why company take approval of the existing shareholder? Because due to issue of equity shares to the employees under this option scheme, the number of equity shareholder Okay, the number of equity shareholder rises, so the company get approval of the existing equity shareholder through a special resolution. And what is meant by special resolution? Special resolution is the resolution which is passed by 75% of majority or more than that. That is a special resolution, and the copy of special resolution passed by company, that is every special resolution must be submitted by the company to the registrar of companies within 30 days of passing such resolution. Okay, so I repeat, employee stock purchase scheme. Under this scheme, okay, basic idea of this scheme or basic idea of this option, that is company issue shares to employees at a discounted price at a future date. That is the meaning of employee stock purchase scheme. And the amount of shares which company issued under the scheme is deducted through installments from the salary of the employee. Okay, so is it clear to all of you that is what is meant by employee stock purchase scheme? If you understand, then please say yes only in chat box. If you don't understand, then please say no only in chat box. Okay, next. Okay, next, stock appreciation right scheme. Stock appreciation right scheme. Okay, so this is also another scheme. So under this scheme, the employees are given a right. Under this scheme, the employees are given a right to receive appreciation in the form of shares of the company in future date. The company receive appreciation. The central idea of this scheme, that is the employees receive a right to get appreciation or to receive appreciation in the form of shares of the company in future date. The company allot a specific number of stock appreciation right. The company can allot a specific number of stock appreciation right. Okay, so the company can allot a specific number of stock appreciation right units that are linked to the value of company shares. Means company issue a stock appreciation right. Which is equal to or which is linked to the value of company's shares. On the date of allotment. Then what is meant by allotment? That is transferring ownership of shares by company to its applicants or allottees through the process of allotment of shares, in short. Okay, so I repeat, the stock appreciation right units that are linked to the value of company shares on the date of allotment. Means company issue only stock appreciation right. Which and value of these rights is equal to the value of company's shares on the date of allotment. Then the company, when issue company this appreciation right at the date of allotment, okay, on the relevant date, that is future date, depending upon the appreciation the appreciation in the value, depending upon the appreciation in the value of shares which are linked to the SAR. SAR means stock appreciation right, units. The employee is paid the appreciation value in cash or through equity shares. Okay, so stock appreciation right scheme is a form of bonus compensation. Okay, what is meant by bonus? Already we discussed one concept, that is bonus shares. Already we discussed one concept, that is bonus shares. Bonus shares means the shares which company issued free of cost, the company which issued free of cost to the existing equity shareholder. So under stock appreciation right scheme, is a form of bonus compensation given to the employees, if company perform well and its market price of shares goes up. Market price of shares goes up means when market price of company goes up, what is the aim of financial management? One of the aim of financial management is to maximize the owner's value. Maximize the owner's value means who are the owners of company? Equity shareholders are the owners of the company. Then the price of shares when maximized, in the stock market, then the performance, then it is treated that, or it is the indicator of the company perform well. So it is a bonus compensation given to employees if the company perform well and its market price of shares goes up. Okay, so the next, the employees do not have to pay for buying any shares. Means this is a bonus given by company to its employees. So for this, company employees does not require to pay any amount to the company because it is a bonus compensation given by company to its employees. Next, company has to give employees a vesting period of minimum 1 year to exercise this option. Then what is by vesting period? Vesting period is the period during which the company the employee exercise his option. Okay, so there is no lock-in period. For stock appreciation right scheme. There is no lock-in period for stock appreciation right scheme. In case of employee stock purchase scheme, that this scheme which we already discussed, in this case there is a lock-in period of 1 year. Then what is meant by lock-in period? So during this lock-in period of 1 year, the employee cannot sell its shares. But in case of stock appreciation right scheme, there is no any lock-in period. Then employee can immediately also sell its shares. To issue stock appreciation right scheme or shares under stock appreciation right scheme, company has to get approval of shareholder through a special resolution. Okay, many times we discuss this concept is when company issue new shares through various schemes, that is bonus shares, in case of right issue, in case of employee stock option scheme, in case of employee stock purchase scheme, in case of employee stock appreciation scheme, company must require to get approval of shareholders. Okay, company must get approval from the existing equity shareholders because due to these schemes, the number of shareholders, that is equity shareholders, may rises. The number of equity shareholders may rises. So company must get approval from the existing equity shareholders. So any difficulty in stock? I just repeat what we studied. Okay, it is a right given by company to its employees, to its okay, under this scheme the employees are given a right to receive appreciation, okay, appreciation in the value of specified number of shares of the company at a future date. The company allot a specified number of stock appreciation right, means company gives a specified number of stock appreciation right which is linked to the value of equity shares, which is linked to the value of equity shares. Okay, and it is a bonus compensation, it is a bonus compensation given by company to its employees, and for that company does not require, sorry, employee does not require to pay any type of amount, and there is no any lock-in period for stock appreciation right scheme. There is no any type of stock appreciation right scheme. Okay, so how many of you don't understand stock appreciation right scheme? If you understand, then please say yes. If you don't understand, then please say no. Okay, so the next and most important point, that is sweet equity shares. Sweet equity shares. These shares are issued by company. Okay, that is sweet equity shares. What is meant by sweet equity share? These shares are issued by company to its directors or employees at a discount for consideration other than cash. Consideration other than cash. Then what is by consideration? The directors employees perform certain functions for the company. So company required to pay certain amount or a certain specified amount to the employees or director. So in this case, the director, in this case the company pays this consideration or this amount in the form of shares and not in the form of cash as a consideration मोबदला. So it is issued in the recognition of their valuable contribution to the company. It is issued in the recognition of their valuable contribution to the company, which has resulted in increased profit, because these directors employees perform their functions and the result of their functions, that is the profit of the company, may be increased. The profit of the company may be increased. So company issue sweet equity shares. Company issue sweet equity shares. Sweet equity shares rank pari passu with other equity shares. And what is meant by pari passu? Pari passu means equal footing, will be treated at par with other equity shares. Now what is meant by issue of shares at par, issue of shares at discount, issue of shares at premium? Issue, if face value of share is 100 and it is also issued for 100, then it is known as issue of shares at par. Listen carefully. Issue of shares at par, premium and discount. Three concepts are important because of many times question is asked for on these three concepts for as a fill in the blank question. As a fill in the blank question. Okay, so equal footing, pari passu equal footing will be treated at par with other equity shares. With other equity shares means equity shares issued under sweet equity shares as a sweet equity shares and ordinary equity shares. Both are treated equally. Both are treated equally. These shares have a lock-in period of 3 years. Then what is meant by lock-in period? So the shares issued to the employees or directors, these two persons, employees and directors, not sell these shares to any persons within this lock-in period of 3 years, or they cannot transfer to during this period of 3 years. Okay. Next, company has to get the approval of equity shareholder. The company has to get the approval of shareholder through special resolution to issue sweet equity shares. Okay, if company wants to issue the sweet equity shares, if company wants to issue a sweet equity shares, so at that time company require to pass a special resolution by conducting extraordinary general meeting and take approval from existing shareholder regarding issue of sweet equity shares. Regarding issue of sweet equity shares. So the next point, procedure of sweet equity shares. Procedure of sweet equity shares. First point of the procedure, that is valuation report. First point of procedure of sweet equity shares, that is valuation report. Okay, the procedure is not given in the textbook for your kind information, and those who wants to study the prepare for the CSCS, this procedure is important. Okay, and if question is asked in the examination for 8 marks, explain in detail sweet equity shares. Explain in detail sweet equity shares. So at that time you have to write down meaning and this proper procedure of 13 points. Okay, so valuation report. Okay, so section 54 of Companies Act 2013 with hello. If you have any doubt, query, then please ask only in chat box. Answer, please ask only in chat box. Okay, so this procedure is not given in the textbook, but for your knowledge purpose, okay, I explain here the procedure of issue of how to issue sweet equity shares. How to issue sweet equity shares in detail. First point, valuation report. As per section 54, of Companies Act 2013 and Share Capital and Debenture Rule 2014, those company who wants to issue sweet equity share, company must obtain a valuation report from the registered valuer, or a valuation report from the registered valuer, who shall provide a proper report addressed to the board of directors with justification for such valuation. That is, company must get a valuation report from proper valuation. Okay, there is a different stock valuators. These stock valuators decide the value of shares on the basis of various methods, and So company must get a valuation report, and the valuator is appointed by the company, who shall provide a proper report addressed to the board of directors. So the valuator sends this report to the board of directors with justification for such valuation. Next, nomination and remuneration committee. As per section 178, company appoints nomination and remuneration committee. In case of company where a nomination and remuneration committee has been constituted, okay, in case of company where a nomination and a remuneration committee has been constituted. What is meant by constituted? That is, proper committee is set up, or proper bench, a group of people, a committee of group of people is set up, that is constituted. Then the issue of sweat equity shares to directors or key managerial personnel shall be recommended to the board by such committee unless issue of such shares forms a part of terms of the remuneration already approved by the committee. Okay, so in case of company, when a nomination and a remuneration, what is meant by remuneration? This concept, that is a remuneration, we studied in 11th standard. The concept, that is a remuneration, we studied in 11th standard, that is a remuneration or salary. Okay, the directors or employees perform functions in favor of the company. So as a part of reward, company pays salary or remuneration to the company for the duties which the directors or employees perform for the company. That is a remuneration. Okay, so nomination and a remuneration committee. Then issue of sweat equity shares to directors or key managerial personnel. Directors or key managerial personnel shall be recommended to board by such committee under issue of such shares forms part of the term of the remuneration already approved by the committee. Means as a part of remuneration, okay, 1 minute. Okay, so this committee, that is nomination and remuneration committee, recommend to the board of directors regarding issue of sweat equity shares. If company does not recommend, or this type of committee is not appointed, then this issue of such shares treated as a part of the terms of the remuneration, already approved by the committee. Next, board meeting. Next point of the procedure, that is board meeting. Under section 54 and 173 and secretarial standard first. Then what is meant by secretarial standard, and when we studied the concept of secretarial standard? Okay, secretarial standard first. We studied secretarial standards, all secretarial standards in 11th standard. Okay, the first secretarial standard is relating to the board meeting. So company hold board meeting. First, company get valuation report from the valuer. Then company appoint nomination and remuneration committee. After the report of valuation report and report of remuneration and nomination committee, company conduct a board meeting. Okay, so for which purpose the company conduct the board meeting? The company conduct board meeting for the purpose of to approve issue of sweat equity shares to directors, employees, subject to approval of members by special resolution. Okay, when company wants to issue sweat equity shares, company must pass a board resolution. for conducting extraordinary general meeting, then company fix day, date, time, place, agenda of the general meeting for passing a special resolution to issue sweet equity shares. Next, to approve draft notice of the general meeting along with the explanatory statement. What is by draft notice, what is by explanatory statements, all these concepts will be studied in 11th standard. Okay, for your kind information, if you want to study or score highest marks in 12th standard, you must know what we studied in 11th standard. For the purpose of passing the special resolution. Okay, next, filing a copy of special resolution. With the registrar of companies. Next, forms and document filings. In form number MGT 14 along with the requisite documents and fees. In form number MGT 14 along with the requisite documents and fees. Okay, company submit all the documents and forms with the ROC. Next, company conduct again general meeting. Okay, then company conduct general meeting. Hold a general meeting to pass a special resolution for issue of equity shares, that is sweet equity shares. For that purpose, company conduct general meeting. Next, forms and document filings. File a copy of special resolution together with the explanatory statements which company passed, that is special resolution company passed in extraordinary general meeting, which is conducted for the passing a special resolution to issue sweet equity shares within 30 days to the ROC in form number MGT 14. Next, again board meeting. Hold a board meeting or pass a board resolution by circulation within a period of not more than 12 months from the date of passing of special resolution. Must means the company first conduct general meeting. In general meeting, company pass a special resolution regarding issue of sweet equity shares, and after passing this special resolution, company then pass a board meeting. Company then conduct a board meeting, and in board meeting, okay, company discuss and pass a resolution by circulation or board resolution within 12 months from the date of passing special resolution to consider the allotment of sweet equity shares. Okay, then for which purpose the company conduct board meeting? To consider the allotment of sweet equity shares. Next point of procedure, that is register of sweet equity shares. The company shall maintain a register of sweet equity shares in form number SH3 and shall forthwith enter therein the particulars of sweet equity shares by company secretary of the company and or by other person authorized by the board for the purpose. Means after then company maintain a specific book, that is like a books of accounts, register of member, register of debenture holder, register of deposit holder, a specific book, that is register of sweet equity share. And in this register, which is mentioned in proper format, which is given in the Companies Act, this particular format name is form number SH3. The company maintain a register of sweet equity shares. Next, company maintain a register of member. In case of private company is not allowed to allotted in demat. Then what is meant by demat? Demat means issuing shares in electronic form or conversion of shares into electronic form from physical form. Okay, so those company who don't follow the demat procedure or dematerialization procedure means the company keeps their shares in physical form, then this company must make unnecessary entries in the register of member. Next, forms and document filings. File a return of allotment, return return of allotment with ROC within 30 days from the date of allotment in form number PAS3 along with the requisite documents and fees. Next, report to Reserve Bank of India. When the allotment of sweat equity shares is made to any non-resident, then file form FCGPR to RBI. And what is meant by non-resident? As per Income Tax Act, the person who stay abroad for more than 180 days known as a non-resident Indian. Okay, then file form FCGPR to RBI on firms RBI on the website, which is the name of website is firms.rbi.org.in portal within 30 days of allotment. And when company issue sweat equity shares to resident outside India, resident outside India, then file a form in form number ESOP within 30 days from the date of issue of sweat equity shares. For your kind information, then that is non-resident Indian and overseas citizen of India OCI and resident outside India, both the concepts are treated equally. Okay, next, deliver the share certificate. This is the last point, deliver the share certificate. So in case of private company, if shares are not to be allotted in demat form, means private company shares not allotted in demat form, then these type of companies allot share certificate in form number SH1 within period of 2 months. From the date of allotment to the respective shareholder after payment of stamp duty to the respective state government. Okay, the issue of share certificate, that is happen only in case of when company issues shares in physical form. If company issues shares in demat form, then there is no requirement to issue a share certificate because all the shares are preserved in the form of dematerialization, that is in electronic form. So I repeat once again the points of the procedure. If you have notebook and pen, then please note down. First, valuation report. Second, nomination and remuneration committee. Third, board meeting. Okay. Fourth, forms and document filings. Fifth, general meeting. Sixth, forms and document filing again. Seventh, board meeting. Eighth, register of sweat equity share. Ninth, register of member. 10th, forms and document filings. 11th, RBI reporting. 11th and 12th, RBI reporting, and 13 delivering the share certificate if company issues shares in rematerialized form or in physical form.